Tuesday, December 18th, 2018, Maneco 64, home of alternative economics and contrarian views. This morning I'm going to talk about how the markets and monetary policy and the economy for that matter are in uncharted waters. S&P 500 index yesterday closed at a 14-month low. Intraday it made a new low for the year, but it rebounded in the last half hour or so to close above that level. Of course, we're not out of the woods. Before I look at the overall picture and the uncharted territories that we're now in markets, monetary policy, and economics, I'll look at what the markets are doing this morning. It's just around 7:45 a.m. London, and many of you might ask, why do you do a market update at 7:45 a.m. London or thereabouts? Well, I used to work in the city of London. My clients were all institutional clients. Most of them were in the UK, but the majority in Europe, in the continent. But I also had some clients in the US, and a lot of them used to like a rundown on the markets when they came in the office a bit later, in New York mostly. But also in London, we were on our, at our desks from 7:00 a.m. and that's very early. You might say, well, that's because the European futures markets they open, and the FX market open at that time, and in the continent is 8:00. So right now, the market tone is being set for the European session, and that's why I do this update. And many of you existing subscribers and viewers like the updates, and that's why I keep doing it. So where are we this morning? Well, spot gold is at 1247.20, up $1.50. We're still trying to knock on that 1250 level. Yesterday gold did well, of course. We were up almost 1%, maybe about 0.8, I would say. The high so far this overnight is 1249.20, the low 1245. Silver 1469 right now, up 2.5 cents. Range has been 1462 to 1472. Key level for me in silver on the upside is 1491 now. The Dow, S&P, and Nasdaq 100 futures, they have rebounded. I think the powers that be saw S&P make new lows, in the market, and they said, well, we need to do something here in the last 20-30 minutes, and it's continued. Dow futures up 140 right now, up 0.59% at 23,728. We're still below that 24,000 level though, which was a key support level. S&P 500 index futures, or S&P futures, up 13.5 at 25,5860. The low yesterday from the year that we broke was 25,3269 to be exact, and I think we traded just below 2530, and we closed around I think 2546 or something like that. S&P 100 futures is up 0.5% as well at 64.84. Currencies, the pound is 126.37, up 21 pips. Euro is unchanged around 113.50, and the dollar is continuing to go down against the yen. It's at 112.57, down 0.25%. Dollar is also slightly lower against the yuan, not much though, 689.80. Crude oil, WTI is below 50. Not surprising with the mayhem in the overall markets. We're at 49.30, down 1.7%. Brent is at below 60 at 58.50, down 1.85%. The bond markets, the curve is pretty flattish. 2s to 5s is flat at 267. Those were at 271 yesterday, so they've moved down 4 basis points. The 10 years at 284, that moved down as well, about 2 to 3 basis points. So actually, the curve steepened a little bit, since yesterday. So uncharted territories for the markets, monetary policy, and the economy as a result. Well, let's first look at the markets, at some charts that I think are important to look at today. First of all is a S&P 500 index chart, and that's going back to the beginning of 2017. Just wanted to show you how we broke the low from the 9th of February this year, which was, as I said, at 25.3269. The low yesterday was 25.3054, and we were able to close just around 25.46. But as you can see, that's the lowest level since October 2017. So that's very negative. I think the markets now, we have rebounded overnight, but we're not out of the woods yet. As I said, uncharted territory. The other one that I wanted to show you is the chart of Goldman Sachs Group, Inc. The vampire squid, so to speak. I've been covering Goldman Sachs a bit the last 6 weeks or even more. I detected this head and shoulder formation in the chart of Goldman Sachs that didn't look very good, and this has coincided with the scandal that's come out about Goldman Sachs being involved with the Malaysian Development Bank or the Sovereign Wealth Fund. The Malaysian government yesterday brought criminal charges against Goldman Sachs. So we have Lloyd Blankfein, who stepped down a few months ago. At the time, we didn't know why, but I guess now we know why he stepped down. It's not looking great for them. Of course, a lot of you will say, well, they're made men, so to speak. Nothing will ever happen to them. Well, we don't know. We don't know, actually. That's why they're black swans. First, I'd like to show you this monthly chart going back, almost 20 years here. And you can see the head and shoulder there. It's not as clear as in the daily chart, but there's this trend line, as you can see here, since the bottom in 09. We tested that yesterday, the low yet, and that's around 170 for the Goldman Sachs stock price. Yesterday, the low was 166.50 in Goldman Sachs, and I think we closed just above 168, the stock. So it's not looking great. I'll show you more a shorter term chart of Goldman Sachs, the daily one. You can see what I mean here. You can see the head and shoulder a lot more clearly. So that's why this trend line is so important. Of course, Goldman Sachs was able to rally a few dollars yesterday, going on to the close because the whole market rebounded. The other chart I want to show you is something called the KBW Bank Index. And that's a very important index because it's made up of the major lending institutions in the United States, not only in New York or Wall Street. As you can see, you've got Bank of New York Mellon, BBT, Bank of America, Capital One Financial, Citigroup, Citizens Financial Group, Comerica, Fifth Third Bank Corp, First Republic Bank, Huntington Bankshares, JP Morgan Chase, New York Community Bank, Northern Trust, Regions Financial, State Street, U.S. Bancorp, Wells Fargo, Zions Bancorp. And why am I showing you the KBW Bank Index? Well, because the U.S. economy and all the major Western economies now, for that matter, especially the U.K. as well, are dependent on consumer credit. Politicians, bankers always want people to, spend and borrow. And the economies have become so financialized that this is the engine, this is the engine of economic growth now, finance. And so the health of the banks is important. Goldman Sachs is not in this list because Goldman Sachs is, even though it's a bank holding company and it's not a lending institution per se, and that's why it's not here. So those are the components. But look at this chart, the KBW Bank Index. Look what it did in 2000, from February 2007 when it topped all the way to March 2009. That thing dropped from 120 to 20. And you can see that it rebounded and it never was able to make that old high at 120. And it looks definitely like the top is in now. Another important chart to keep an eye on, KBW index. What else? Well, for my UK viewers, I wanted to show them, or viewers anywhere around the world, how the stock market in the UK is done since the dot-com bubble, when the FTSE topped just below 7,000. Have a look. We are below the levels of 2000 here in the FTSE. So when you listen to the news in the UK, they give you market news, economic news. They always mention the FTSE, what the FTSE is doing. But looking back in 2000, the price of gold in pounds was below 200, and now it's almost 1,000. So it's been almost a wasted 2 decades for those who've ever invested in the FTSE. That's why I recommend, not only for my UK viewers, but for all my viewers, that they need to have precious metals as a foundation of safety and insurance against market mayhem. Am I saying people need to get rid of all their stocks? It's up to them. I'm not advising people here. I'm just saying what I do, and I think what could help as insurance, monetary insurance, physical gold and silver. And for my UK viewers, if they're interested, they can go in the description and go to goldinvestments.co.uk. The link is there, the description. And if you use maneco64 promo code, you get a 0.5% discount off all bullion purchases. Gold Investments, based in the City of London, arguably the oldest bullion dealer in the City of London, family run, and I recommend them. Will their prices be competitive? Yes. But some days they might be better, sometimes not as good as other dealers. I recommend atkinsonsbullion.com as well. But I don't have a promo code for that. So that I wanted to show the waste, the wasted almost 2 decades in the stock market in the UK, while the currency has been wiped out almost. I wanted just to show you the major world indices this year. So right now the Dow is down 4.56% year to date. S&P is down 4.78% year to date. NASDAQ is down 2.17%. The Russell 2000, the small caps in the US, that's doing even worse. That's down 10%. That's the VIX there. S&P 500 VIX is up 122%. So volatility has done well. And you can see all the other major indices except for the Brazilian one, which is up 13. They're all in the red. What about the uncharted monetary policy? So this was the uncharted markets, right? We are in uncharted waters for the stock market. And one of the reasons why is because I think we are on uncharted monetary policy. We've had, since 2008, very unconventional, never done before monetary policy all around the world. We've had zero interest rates. Some places we've had negative. We had trillions upon trillions of dollars of QE, money printing, where central banks balloon their balance sheets to buy government bonds, mortgage bonds, and in some cases like in Switzerland, ECB, Japan, they even buy corporate bonds, stocks, all kinds of assets. And in my opinion, they kept that policy for too long. That's the whole problem. That's why it's uncharted. The U.S. Started raising rates December 2015. So for almost 8 years, they kept rates at zero. They kept, printing money. And then, of course, they've stopped. They're, selling their balance sheet. They have been raising rates from almost zero to like over 2% right now. But look what's happening to the markets. Look what's happening to the KBW Bank Index. Look what's happening to the yield curve. And the other thing I would say is that the central banks have helped each other out. When the U.S. started talking about, going on hold in their QE, started raising rates a few years ago, the ECB and the Bank of Japan, they came in and started doing massive amount of QE, cutting rates. But now, last week, we just got told by Mario Draghi of the ECB that they've stopped doing QE. They haven't announced that they're gonna sell their balance sheet, but the fact that they're gonna stop doing QE now, that's a bad sign for all the accommodation. And their rates are still negative. They haven't raised rates. They've said that it should stay where it is up until the summer next year. So they could even be starting to increase rates. But my opinion is that whatever they do, they've kept things too loose for too long, because they knew they had to, because they didn't fix anything in 2008. And tomorrow, it's ironic that the Fed is expected to raise rates. And it could be, what breaks the camel's back, in my opinion, tomorrow's rate hike. And if they don't do it, which I think I think they will do it, it's going to be very interesting to see what happens going forward. Tomorrow as well would be interesting to see what Jay Powell says in terms of what, going forward at his press conference. This is when they announce their, projections for the future. A lot of people, a lot of the economists, banks, Wall Street, they see the Fed raising 2 or 3 more times next year. That could be, out the door. Who knows? And that's why I think also the dollar is very near a top, because I think the Fed is going to be under a lot of pressure to kind of pare back this tightening they've been doing, especially under Mr. Powell. And with Europe now like stopping QE and maybe even starting to raise rates next year, I think the trend for the dollar is going to be lower. Are the markets is this it? Are we going to see a stock market crash? I think we're already seeing it, and it's going to be gradual and over, another 12, 18 months. Who knows? And as I said, physical gold and silver will protect you. They will compensate you for your losses, I think, if you stay in the stock market. If you enjoyed this video, make sure you hit the like button. If you haven't subscribed to the channel yet, make sure you hit the subscribe button. Yes, and you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day, and I'll talk to you later. Take care. Bye.